Hey, Courtney Smith here, and I want to talk about how to attain financial freedom. Everybody talks about it, everybody wants it, but how do you actually get it? And really there's three elements that are necessary to get financial freedom. And a lot of this is going to be kind of like what your mom probably told you, but let me reiterate it anyway, because we often forget about what's necessary in order to become financially free as we go on with our daily life. In other words, we get wrapped up in the tyranny of the now, I've heard it called, and we forget that we also have to prepare for the future. Well, first of all, the first thing we need to do is we need to save more. That's element number one. We need to save money now. You've heard it always said, it's an old thing, you should put away the first 10% of your income into savings. That's good advice. That's good advice. Why only 10%? Why not 20? Well, I want to go out with my friends on Saturday night. I want to buy a new iPhone. No, none of that's important. The key to financial freedom is to get money as soon as possible. You see, one of the underlying components that's necessary for you to become financially free is to get money and then grow that money. You can't really get financially free from just a job. What you really need to do is to get your money to work for you. And then, once you get some money, then you can start to compound it. You see, Warren Buffett's not a billionaire because he's a great investor. He's not. He's a good investor. But he did two things that were really smart. I mean, really smart. Number one, he realized the power of compound interest. That if I make a little bit of money, eventually it turns into an exponential growth curve. And so he started out with $100,000. He was not a poor person by any means when he started. $100,000 back in the 50s was a lot of money. And then he did his second brilliant thing. He bought an insurance company. And that enabled him to use other people's money to invest. That's the mark of a genius investor. Use somebody else's money, but you keep all the profits. Pretty smart, pretty smart. So, but here's the point, the compound interest. So even if you're a young person, you're going to be able to become financially free decades before your parents. I'm a little bit older, all right? I have some financial freedom. So people who are my age in their 60s, it's going to be a bit harder. But you've got to start some way or another. We know that Social Security isn't going to be enough to live on, and we know that people are not saving enough. So save now. Now that's step number one. That means that you don't buy the new iPhone. That means that you don't go to movies. You sign up for Netflix. You eat at home. You do all the things that you know will save money. I'm not going to teach you how to become frugal, but you need to become frugal. Now, once you've saved some money, now you need to go to the second element. The second element is earn more money. Now, okay, once again, I'm going to tell you stuff that you're not going to want to hear yet. I'm going to get to the good part in a minute, but go get a second job. Go tell your boss you need a raise. Go start a business. Now, and the business can be something you do in the evening. We now have the internet, which enables everybody to be an entrepreneur. You don't have to go out and get a second job working in a convenience store or driving a taxi. You can start a nice small business from home. But you need to make more money so you can add to the pot of savings that you already had. So you start with this much savings, and then every month out of your paycheck you add more and more and more, and then of course you go get a second job, or you get a raise, or you start a small business, and then you add more and more and more to it. You got it? So you want that pot of money to get bigger and bigger and bigger through earning and through savings. And that leaves us to the third thing. What do you do with the pot of money? Well, you've got to invest it. You've got to get that money earning you money. You've got to have your money make money, because to tell the truth, the first two elements of this three-step process are really to get that your pot of money bigger so that you can invest it. Now, so many people, they rely on Social Security, they rely on a pension plan because they're afraid of investing. Look, investing is, I'm not saying it's risk-free by any means, because it's not. But on the other hand, you've got to invest. And guess what? If you don't invest, that's investing. So if all you do is keep your money in a checking account earning zero, well, that's an investment decision. You've decided that having a position of no risk is important and making money is not important. No, look, let's deal with some facts. Let's bring some facts to bear. Number one, where's the best place to invest? And I'm not going to talk about things like trading Forex, and I'm not going to talk about anything, exotic like that. Let's just stick to plain vanilla in this video instruction. Number one, where should you invest? Well, you can leave it in cash, you can put it in bonds, you can put it in stocks, you can put it in real estate, you can invest it in a business. Those are really the 5 ways you can do it. Can we agree that cash is not a good idea? Because there's no return. If you leave it in a checking account, there is literally no return. Even if you put it in a savings account, really? 0.25% minus inflation means you're losing money every year, so we're not going to save it. How about bonds? Well, bonds suck. Right now, bonds are involved in one of the biggest bubbles of all time. We know now that in some countries like Switzerland, every bond has negative interest rates. You have to pay them to lend them money. What? We're now at a point where there's trillions of dollars of negative interest rates. Well, that can't last forever. We will see 5% again. And if interest rates go up, that means the value of the bonds has to come down. So, to me, bonds, unless you're going to speculate in bonds, they make a bad long-term investment. They're guaranteed to lose money. So that's a pretty bad place to put your money. How about real estate? Well, real estate's a very common thing for people to do. They feel comfortable with it. They probably own their own home and they've been through the process, and so they feel comfortable with that. Well, it used to be that people felt it was a risk-free investment, and now after 2008, everybody knows that real estate can go up and it can go down. Okay, but let's ignore that for a second. I'm not a big fan of real estate. I'm gonna kind of hedge a little bit here. The reason I'm not a big fan of real estate is because over the long run, real estate only matches the rate of inflation. If you take any 10-year period, basically all you're going to get is whatever inflation is, that's what your real estate is going to return to you. And in this day and age, the yields are actually quite low, because prices are still too high in most places in the world. So how do you make money in real estate? I believe that you can become a billionaire investing in real estate. But in real estate and in the stock market, I think that there's 2 groups of people in each one of those markets. There's the sharks and the fish. Well, look, I know I'm the fish in real estate. I'm not a professional real estate investor. So I know that all I'm going to do, I have to assume that I'm just going to earn whatever the normal rate of return is on real estate, which is 2% after everything. So that doesn't sound all that great to me. All right, that doesn't sound all that great to me. However, if you study real estate and if you become one of the sharks, where you know how to finance the deal, you know how to negotiate the deal, you know how to find the right pieces of real estate in the right locations, then you can significantly outperform that. But for the average person, real estate is not a good investment. You've got to become a professional, and a professional real estate person can become a billionaire. I personally know a person who's become a billionaire in real estate. They became a billionaire, gosh, they've been a billionaire probably for about 20 years, so it's not like they just became one recently. Now, the guy's in his 80s now, but by the time he was 60, he was a billionaire. He's a famous guy, I won't give you his name. But nonetheless, it can be done. But you've got to be the shark. You've got to study it. You've got to really become immersed in that marketplace to truly understand what's necessary to become a billionaire or financially free in real estate. Let's talk about one that I like better, of course, because I'm the shark, and that's investing in the stock market. But I even think that for the average person, investing in the stock market is better than real estate. And here's why. The returns are higher than the rate of inflation. We know that real estate over the long run only matches the rate of inflation. Let me just pick a number. Let's say 2%, 3%, something like that. Let's say 3%. The stock market over the long run, however, gives you an average of about 9.8%. So significantly higher. And if you start to think about compounding, let me just say 10%. If you start compounding at 10% versus 3%, you attain financial freedom, well, decades sooner than the real estate person does. Well, but Courtney, there's more risk in the stock market. Yes, there is, but not on a 10-year basis. In other words, unless you bought the stock market at the absolute high in 1929 or 1999, the absolute high, there's been no 10-year period where the stock market didn't outperform real estate. And by the way, also outperform gold. No 10-year period. 1-year period, absolutely correct. 2-year period, pretty much. 5-year, a few times. But 10-year, no. Over a 10-year period, stocks are more safe than real estate. Because yes, they go up and down, but they go up more than they go down. And so at the end of 10 years, any bear market there's been, like 2008, the market is far beyond that. And of course, if you bought at the bottom of 2008, well, then it's spectacular. But I'm not going to assume that. I'm going to assume in the studies, they show that if you bought every year and held for 10 years, next year, 10 years, you would outperform any other asset class. I think rare stamps might be better, something like that. But once again, I'm the fish in rare stamps. And so to me, even being a fish in the real estate, in the stock market, and just simply buying index funds is a far better place to build your financial wealth. So let's go back. And by the way, it's liquid. If there is a big catastrophe, you can get out. With real estate, you got to paint the building, you know. I don't want to do that. That's too much work. It'll take you 6 months to sell it. I like picking up the phone and saying sell. So that way, it's far less risky than real estate. Now let's carry on though. So we start out, the first thing, the 3 steps are you've got to save more money. Come on, I know you don't like it, but you got to do it if you want financial freedom. You got to suffer now for the glories of the future. But when I talk about financial freedom, I'm talking about being financially free in 20 years, starting with nothing. Maybe you can do it quicker than that. But if you can start to save money, build up a nest egg of $10,000, $5,000, 50, 100, the more the better, obviously, and then earn more so that you can build that nest egg even more and then invest it, which then compounds, you'll become financially free in maybe 20 years. And that means that even a person who's starting in their 40s or 50s can really attain true financial freedom. And then of course add in all the normal types of things like Social Security or pensions or whatever else. But when I say financial freedom, I'm talking about being able to live where you want, to do what you want, with whom you want, wherever you want. That's financial freedom. And the thing is, you can start on it right now. At every moment of your life, you have to sit down and say, for the next hour, what am I going to do? Am I going to go earn more money, or am I going to watch TV? Am I going to eat oatmeal, or am I going to eat steak? To me, what we're saying is we need to eat oatmeal now so we can get obese on steak later. Okay, no, I'm just joking about that, but you know what I mean. So that we can do whatever we want later. In addition, in this, I'm actually going to create a series of videos. I want to talk also about how you can live like a millionaire, but not be a millionaire. Okay? And that ties in with our first element, which is frugality. And the frugality is how do we have a great life and not spend any money. But I'll talk about that on another video. I'll go into each of these three elements more deeply in this series. But this is the outline. This is how we need to approach our life in order to attain financial freedom. And at the same time, I'm not talking about doing really exotic things. Look, I trade futures and Forex and options and all kinds of crazy stuff. And if you do that right, you can attain financial freedom much quicker. But let's assume you're not going to do all those more sophisticated things. Let's assume you're not going to become the shark in investing. You're going to stay the fish. Still, invest, invest, invest. Pile all your money into the stock market in mutual funds or better yet, index funds on an exchange, and just let that compound over time. Listen, I hope you find this useful. As I say, I'm going to go into detail on each of these three elements because I really, I live for people getting financial freedom. Let me be real honest with you. I teach how to invest, so I obviously have an axe to grind there, but the reality is I teach this because I get such a thrill out of seeing people move their financial life forward, about how they're able to become financially free. That really is a big thrill for me. I like to see people share the benefits that I've had. So, please, take all this to heart. I know some of it's hard. We don't really want to be eating oatmeal when we could be eating sushi, but you got to do it if you want to be financially free. Financial freedom is not free. It costs. All right, please go out, do this stuff, and look for my next video in this series. Thanks very much. We'll talk to you later. Bye-bye.